gold, Starbucks, and the secret to stop that little bad habit called early profit taking. That's what's on the agenda for today's weekend review video. Hey gang, my name is Akil Stokes, head trader at tradingpower.com, and thank you so much for joining me for this week's video. It feels great to be back. I was on the road for about a week or so, just traveling the United States, and well, there's something about getting back home and sleeping in your own bed that just is comforting. Anyway, I've got a lot in store for today's video. I mentioned it earlier. We're going to review the Starbucks trade I talked about a few weeks ago. We're going to talk a little bit about gold, and I'm going to do a breakdown of a trade we took in a live room today on pound yen, and really talk about a little secret to helping you kick that bad habit of taking those profits off early. Now, before we get into today's content, I do ask one favor for you. Can you please like, can you please subscribe, and can you please share this video? I'm up to about 2,000 plus followers, over 100,000 views, and I just want to keep growing this thing. So I'm going to actually pause the tape for a little bit and give you the chance to click that button. And if you're thinking I can't see you, I can, so make sure you click it. I'm waiting on you. All right, I appreciate the support. The first thing I want to talk about today is Starbucks. A couple weeks ago, I talked about a trade on Starbucks, and really the whole concept of the video was using the skills of technical analysis, using the skill of knowing how to read a price chart on different markets, and how it's not, even though my main focus is currencies, my main focus is the FX market, that this skill can be used in other forms of investment as well. And well, before we get into the update, I want to give you a flashback at what exactly we looked at. And stuff like that, or day trading, you can still use these clues on the higher time frames on different markets to get ideas of where is the best place to buy or where is the best place to sell. We can even take this down to a 4-hour chart, more of a swing trading time frame, becoming more of a trader and not an investor. And well, you've got about 3 patterns sitting here right now. You've got 4 if you count the 2618, but you've got about 3 patterns sitting here right now. Not going to take too much time on them, but if we draw out an X to A to B, B to C, C to D, we're looking at a cipher pattern completion about right here, about 77.60. So right under $78. We can also draw in, let's change the color of this. Let's make this one purple. We have a potential butterfly pattern starting at this B leg, looking at an X to A to B, B to C, a C to D extending to that 127. So a little bit above that cipher pattern completion, 127, right about there, right about 78.14. And then lastly, we have a potential Gartley pattern as well. If we do one more, make this thing even more colorful, looking at our total swing, X to A to B right here, B to C, C to D, going to complete the same areas of our cipher. That's 786 and that 127 extension. So you can see a pattern trader as well. If you want to be a trader on these things, come down to the lower time frames, not necessarily lower time frames, but lower than the weekly chart. And we've got 3 patterns lining up in the same area for a short entry. So whether you're, long bias, short bias, it doesn't matter. You can use these skills. Okay, so if we take an updated look at Starbucks, let me just drag this over here. You're going to see that we've actually reversed off of those patterns, and it looks like we would have hit. Let me just bring a quick fib on here. Looks like we would have hit target 1s easily here at the 382, and then working our way down to target 2s at the 618 if you didn't get that hit already. But more importantly, in the last video, we talked about looking at this, looking at stocks and different markets. You can look at it one of 2 ways. You can be an investor on the higher time frame, looking for a value play or a growth play, or you can look at it like a trader. Now, the trading standpoint is easy. You just trade the pattern. Again, we had, if I remember correctly, we had 3 patterns in here. We had a bat pattern, X to A to B, B to C, C to D. We had a butterfly pattern looking at X to A to B, B to C, C to D up here, Let me just go ahead and make that a different color, yellow. There we go. And we had a cipher pattern looking at X to A to B, B to C, and then a C to D, all in that same level. I may be a little off with the fibs, but you guys get the point. Now, like I said, as a trader, it's easy to make a decision here. You're trading the pattern, or at least you should be. Whether you're a cipher pattern trader, butterfly pattern trader, bat pattern trader, you're saying, hey, if price action gets to this level, then I sell, stops go here, targets go there, nice and simple. But here's how you're looking at it as an investor, and I'm actually pretty big on Starbucks, and me and Jason actually had a good conversation about this out in Trade Empowered headquarters out in KC last week, and I believe we did a live show on it as well, which is a very good show, by the way. That's my live show plug. But if you're in an investment standpoint or mentality, and you're saying to yourself, hey, I'm looking for a value or a growth play out of Starbucks, here's what you're looking at. Say you noticed price action right up here, and you're like, oh, I want to buy, I want to buy, I want to buy. Being aware of price action, being aware of these patterns can help you get in at a much better level. Let me ask yourself this question, or you should ask yourself this question, I suppose. If you want to be a buyer on Starbucks, you're seeing price action right here at, let's say, 77.30. You're seeing these potential patterns right above it. You need to ask yourself this question: is this the best place to get involved for this type of trade? Is it the right place to buy at the same point that three advanced patterns meet up? Or would I get a better value on it if I waited for these advanced patterns to complete, took the chance to see if the stock rolled over, and then got a better buying opportunity either, at some place lower close to this structure down here, or you can use a Fibonacci. That's up to you. Zoom out, and I think we're in a flag pattern too. But that's kind of the mindset you want to use. And I understand that fundamentals do make more of a difference when you're investing longer term. But the technicals are very important because they're going to tell you where and when is the best place to make that move. Now, speaking of using technical analysis on other markets, we had a trade I brought up on my Facebook account. I think I put it on Twitter as well on gold. If I can find this here. Where we at? Blue Bottle Coffee, live show. There we go. If we zoom in right here and look at this on gold, it was March 15th. We talked about two patterns on gold. There's a cipher pattern on gold, a bullish cipher pattern on gold. Then there was a bearish cipher pattern back to back on gold. And if we take a look at the updated chart, XAU USD, I think it was on the daily. We may have to go to a weekly. Let's go to a weekly on gold. If we take a look at the updated chart, you can see that gold banged right off that cipher pattern. We can go down to a daily on this. Right off that cipher pattern right to our projected target levels. Here we go. We're looking at swing high to swing low right here, X to A to B, B to C. We had our 786 completion right below here. And you can see that the market hit that mark, tried to press above it twice, and then rolled right over to a 3-2 completion, which would have been your target ones on this trade. If I can get my fibs acting right. There you go. So one thing I don't like about this platform, the tools just aren't, and you can't ask that much more for an internet-based platform, but the tools just aren't as crisp as, say, NinjaTrader or something like that. But you can see gold hit that cipher pattern completion, that advanced pattern completion, and rolled right over to first targets. And I don't see any reason we're not going to hit target twos, or at least come very close based on structure to target twos down here at 127.75s or 127.74s. So again, a great example of using these patterns, using pattern recognition, structure trading, just the knowledge of price action on different markets to help your decision making, whether you're an investor or a trader. Now, back to the trading, because that's what we do best around here. Let's take a look at a trade we had today in the live room. If I can find my, I got too many charts up. Let me just, give me a second to try and find which chart we're looking at. Boom. Nope. Euro yen. Is this it? There we go. Pound Pound yen on the 5 range. Pound yen on the 5 range, we actually took a bat pattern completion today in the live room. You can see it right here. I actually want to show you something on the 15 beforehand, though. And here's what we were looking at first. And every day in the live room, we spend about the first hour, the first 45 minutes doing top-down analysis. So that means we're working our way down all the way from the hourly charts or the daily charts to the 4-hour charts to eventually the 5, 15, the 5, and the range bar charts, and getting that bird's eye view of what's actually happening in the market. And as we did that today, we saw this nice little pennant pattern here on pound yen. If I draw it out, nice simple pattern. We saw a big flag pull up. We saw consolidation like this. And then right when our live room started around 8 a.m. this morning, we saw the big breakout of this pennant pattern. Now, I'm not a big pennant pattern trader. This happened before my day trading occurred as well. But as soon as we saw this breakout, I was looking for one thing, a retest. Either we're going to get a retest of structure or we're going to get a false breakout and get right back in the channel. And you can see that the market did break out. We did come down, and right at this level is when I was originally looking for a long opportunity at a retest of our flagpole highs right here. Now, I went down to the range bar charts to get a better view because range bars will often give you a clearer view of the market. And we were looking right around this level, right around here. And I won't go into big details, but long story short, I didn't get what I needed to enter the trade. I was really looking at this 170 even handle to get long, and well, the market just did not provide me with an entry reason that fit into my plan. So what did we do? We were very patient. We waited as the market ebbed and flowed. Looks like it's a good thing we didn't get involved at this point because we would have been stopped out. But as the market continued to move, we actually put in an advanced pattern, and this is called a bat pattern. We have an X to A, swing low to swing high, an A to B, which is right here. We have one more retracement, and then we finish with a D completion right down here, and that's going to be at an 886 Fibonacci retracement from X to A. If you don't believe me, let me draw one on for you. Boom, boom. Thicken it up so you can see it. And you can see the market stopped at a dime right on that 886 Fibonacci completion. And retraced up, giving some traders target 1s and target 2s. I was actually shooting for extended targets on this trade based on the analysis we did earlier, thinking that we're going to get, if I can find it again, thinking that we were going to get a move back into the structure level and then continue higher for another bat pattern on, I think it was the 4-hour to 60-minute chart. That didn't occur, but I still did get something out of the market. So I'm not going to be greedy. Any profit is good. But this trade was a great trade in our live room, and not because it won. The biggest thing that excited me about this trade was it was a very hard trade to deal with psychologically. You know, we mentioned earlier that right here we had this big fat even handle number 170, and these numbers are these psychological numbers, these even handle numbers 1700, you know, anything that ends with a 50, stuff like that. Usually price action puts in quite the battle at those levels because, you know, just as humans, you know, we're taught to think in multiples of 10, multiples of 5. So anything, and think back to when you were a new trader. Have you ever put a stop loss just 5 pips above X or 10 pips above X, or you see a stop loss and you're saying, oh, I'll put it at 70.20 or 70.25. You know, those are easy numbers for us to calculate. So it's you know, we're inclined to, just like structure works as a magnet, we're inclined to get stops to really look and lock in at those levels. And because of that, the market, they'll often be pretty good support and resistance levels. So anyway, after that long drawn out story, we entered the trade down here at our 886. We got involved, and I was shooting for target 1s right at 70.09. I usually don't like to shoot above these even handles, but I didn't have a choice on this just because of where the trade completed at. Anyway, the market came to about right here. We took a 10-minute break for our room, and really we just watched the market bounce right off this level from about, you can see 10:10 here, all the way to about 10:31. So a half an hour of the market just bouncing, hitting 170, retracing off, hitting 170, retracing off, hitting 170, retracing off. And that can be very frustrating for a trader. And what it does is it tempts you to make that big mistake called taking profits early. Because the more and more you see that level hit and rejected, what do you start to think in your head, right? You're saying to yourself, "Oh no, this is an even handled number. I know the bears are waiting there. I know the market's gonna have trouble breaking that level. I should just exit the trade right now, right? Oh, it already hit it 4 times. There's no way it's gonna get through the fifth. It's proven to be a high structure level. I should just get out right now for for 15, 18, 20 pips, whatever it is at the time." And it's tough. It's tough. And I won't lie with you guys. I want to do the same thing. That's what stinks about day trading. You got to watch the market ping, ping, ping back and forth. And I told the traders a story about earlier in my trading career how I noticed that the best trades I ever had came in the London session. The overnight London session, the best trades. All my winners, all my big trades came in the London session. And I used to think to myself, hey, man, I'm trading the wrong session here, man. These guys on the other side of the pond, they know what they're doing. This is where the action's at. This is where I need to be. And as I got older, as I matured, I realized that that's not the case at all. It is a very good session to trade, but the case is that I had all these winning trades in that session because guess what? I was fast asleep. I wasn't awake to make mistakes. I wasn't able to watch the market and self-sabotage my trades. I wasn't sitting there going, "Oh, no, get scared, exit." I didn't have any choice. I'd wake up and be like, "Oh, look at that. The market shot right up there. What do you know?" And it's the same thing with these day trades, and it's hard to deal with. And I told my traders today, there's a secret to handling this. It's an easy secret to handling that temptation, to handling that psychological difficulty. And it's called this little I guess underscore button up here, right? If I put my mouse over it, it says minimize. Watch this. One click. Boom. Chart's gone. You're no longer looking at it. You're no longer getting frustrated. No, you have your stop set. You have your target set. There's really not much more to do. So why put yourself through that pain? Why put yourself through that torture of watching it ping tick by tick by tick, driving you insane each second, tempting you more and more to break a rule that you're working so hard on not doing? Load up another chart, do some more analysis, take a walk, do something. Just get away from the chart. It'll be there when you return. Watch this. It's so simple. Bang. Now it's back. So that's I know it doesn't seem like much. I apologize if you expected some world-class secret, but that's it. Trick your mind. Think about something else. Don't worry about it. And before you know it, guess what? Bang. We rolled up and hit target 1. Delightful. Now, we didn't end up extending. I got stopped out for break even, but hey, I got my 25 pips or whatever it was on this trade. I made my money. I'm quite fine with that. No need to get greedy. And I didn't make the mistake of settling for 10 ticks or 10 pips, excuse me. I didn't make the mistake of settling for 10 pips. I made sure to follow my rules, and because of that, I was rewarded with my full bounty. All right, gang, so that's going to wrap it up for this week. Thank you for joining me. I do have a few trades that I'm still involved in on the swing trading side of things, an Aussie CAD trade, pound dollar, and a euro yen last I checked, but we're going about 20 minutes already, and I don't want to hold you too long. Plus, it's been snowing ever since I returned, and today is our first beautiful day, and well, I happen to live right in back of a private golf course, and well, one of the benefits in being in this kind of not gated off community, but this secluded community is we get access to that golf course. So I'm going to go ahead and try a few holes. We'll see how long I last. Hopefully I can use those same psychological tools I just taught you on the golf course as well. Usually it's a lot harder than trading. I haven't seen the discipline from trading roll over to my golf game yet, but one of these days. But I appreciate you joining me as always. Do me one big favor again. I told you this last time. It takes me about 2-3 hours to produce this 15-minute video. So please just hit that like button, hit that share button, leave a comment. Even if it's just, hey, good job, leave a question, a concern. If you're one of those people that just has to hit the dislike button, if you have to hit the negative comment button or write in a negative comment, do me a favor. Just at least make it constructive. Make it something. Don't just say, hey, bad video. Tell me why. What can I do better? I'm always trying to improve and just better this free channel for you guys. But that's it. I will see you guys tomorrow in the live room. Syndicate members, we had an awesome week. I'll let Jason give you guys the details about that in his Forex market preview this weekend, but we've just been smashing the market. And if you got in on the free t-shirt deal, then you picked a heck of a week to get involved. And hopefully we can keep it up. So until next time, guys, plan your trade, trade your plan, and good luck in the markets.